So, students, good morning to all of you. Now, students will be in this particular last segment of section 28.1. Section 28.1, which is a general charging section, so far as head PGBP is concerned. In this general charging section, students, what you have seen is this that it is the profit and gains from business and profession carried on by the SSC at any time during the previous year. So we have seen primarily now what do you mean by the term business and profession. Also, we have seen in this case carried on by the SSC based on one very important judgment of that Supreme Court in Mills distributors. Thereafter, the third particular point that we discussed yesterday was the most important one, which was the profit and gains. And you would have realized how the entire computation gets unfolded. So, just a very quick conclusion of what we discussed yesterday in the context of the profit and gains chargeable under this particular head. The profit and gain, students, will is nothing but a particular the net profit as per the books for the business. On the net profit for the books for the business, you will first check out, do you require any adjustment which is as per the commercial accounting principle. If there is any need of the adjustment, do make that particular adjustment, because we have the mandate of doing this adjustment under section 145. This mandate, students, is coming from the mandate of this adjustment is coming from section 145. That is what it is. Thereafter, once that adjustment is done, thereafter, students, you will do the specific adjustments which are there under section 28 to section 43B. The specific adjustments which are being there under section 28 to 43B. And finally, students, the adjustment that you have to make would be in respect of the ICDS, the Income Computation Disclosure Standards, ICDS 1 to ICDS 10. Do that, you get an amount, and on that amount, the adjustment for the brought forward business loss and the unabsorbed depreciation. Once that is done, you will get your PGB. Then work out the other heads of income, TTI, Chapter 68, total income. Students, this is precisely the point. You should always bear it in mind. Okay. Now, we will now have the last discussion on this. And as I told you, students, the entire heads of income, that is your PGBP, will get opened up. By virtue of this discussion, I will say that your entire PGBP will get opened up in this discussion that is of today. Yesterday, we did something which opened up the entire competition. Today, whatever is the remaining bit for opening up this particular head will get opened up through this particular discussion. So, students, the charge is on the profit and gains. Charge is on the profit and gains for the business and profession. Charge is on the profit and gains for the business and profession, which is profit and gains for the previous year. Now, all that in between, it's dot 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 and directly the last one, the previous year. So, what we are discussing, students, is the concept of previous year. What is subject matter of our discussion right now? When you talk about previous year, students, this is how you should always keep in mind. Profit and gains for previous year. Profit and gains for previous year. Previous year is a financial year, and the financial year for all of you right now is previous year 23-24. So profit and gains for 23-24. Like that you need to look into it. Profit and gains for 23-24 is how you are supposed to look into it. Now somebody will say, what does it imply? Please be careful. How do you determine the profit and gains? I told you, whatever is the items in the credit side and the item of debit side pertaining to your business, that is what is this profit and gains. Generally, that is what in a layman manner, we'll discuss it like a layman now. So layman would be like profit and gains would mean that the credit minus the debit. Now this credit minus the debit should be for previous year. This credit minus the debit should be for previous year. Do you all agree? credit minus the debit should be for previous year. Do you all agree? So it implies that the credit minus the debit should be for 23-24, financial year 23-24. Can I therefore say in this particular context, can I therefore say, students, in this particular context, that a belated item, a belated item, student, what is belated item? Item pertaining to earlier year. So a belated claim cannot be allowed as a deduction in computing the profit and gains for previous year 23-24. A belated claim, meaning thereby a claim of the earlier year, cannot be allowed as a deduction in computing the profit and gains for the previous year 23-24. That is what we can say at this particular point of time, isn't it? That exactly is the game. I don't know whether you would have noticed, students, how many of you would have, those who would have filed the tax audit report. By the way, students, an important point. You have a new chapter. It was not there in the old syllabus. That chapter, students, is the tax audit report. That chapter is the tax audit report. And I'm very pleased to say to all of you that we have made a very great coverage of that topic in your this booklet, last booklet number going to be now, couple of days or so. That coverage you will find for the same as well. Tax audit report. I told you each and everything, whatever is there in your new code, everything is captured. Nothing has been left untouched. So, in the tax audit report, students, there is specific entry. Are you aware of that? What is that entry? You have to disclose what are the belated claims that made, meaning thereby items which relates to earlier years which has been made by the SSC in his tax return. That needs to be specifically highlighted upon. This highlight is required because the general principle says, what is the general principle? General principle that the charge is in respect of the profit and gains for the previous year. Or let's recollect section number 4. Number 4, the charging section. Charge is in respect of the total income of the previous year. Profit and gains of the previous year. Total income of the previous year. Meaning thereby the current year items of income will only be adjusted against the current year item of expenditure, loss or allowances. A belated claim or a claim pertaining to the earlier years as per this general principle will not be allowed to you as a deduction. As per this general principle will not be allowed to you as a deduction. Do you all agree to this? That is what the general principle is. But then know that under the head PGBP, since under the head PGBP, that is section 28 to section 43, are the specific section, there are provisions which are being given to, there are some provisions which are being given to you which allows the deduction of the earlier item, which allows the deduction of the earlier item, students. Any example, students, that you can recall of a specific provision under the head PGBP which allows the deduction of a claim pertaining to the earlier? You can recall. Um, yes, that I would agree, students. Students, recall that. Recall that, and just give me, students, a minute. Just a minute. Okay? Rishi, Ram, Trinad, and yes, these are the examples, students. What you people have given the examples are correct. When the tedious claims, which you people can recall it, all that particular point. Now, I think one section, very popular section, is there. I don't know whether this is or not. Not aware of it, but indeed, there was one deduction of preliminary expenditure, section 35D. Was there a deduction of preliminary expenditure? Rishi, was there a deduction of preliminary expenditure? Answer is yes, it was. Yes, there was a deduction of preliminary expenditure, students. All that 35D, one section is there. You will know now. Could not have recalled in inter-CA. Everything now will be redeemed. Don't worry about that. 35D, preliminary expenditure. Now, you know this particular. Therefore, because of this specific provision which is there in PPP, that you are getting the deduction of preliminary expenditure. Because of what? Because of the specific provision that is there under the head P, you are getting the deduction. Now, whatever example, students, that you are giving it to me, the deduction is given because of the specific provision. Otherwise what? Otherwise, the general principle which is there, which we have just discussed, general principle that only the current year items of income will be allowed to be adjusted against current year expenditure, loss and allowance for the purpose of determining the profit and that is a general principle because the charge is on profit and gains for the previous year, and that is the reason why, unless there is a specific provision, unless what? There is a specific provision to that effect which can allow the deduction of the items pertaining to the earlier period, you cannot be allowed the deduction under the head. You cannot be allowed a deduction under the head PGVP. That's the reason why specific provision. All the section that you students, all what you said it is correct, and that specific provision is because of. If the specific provision would not have been there, then you would not have got the deduction, and you would not have got the deduction of these items. You would not have got the deduction of preliminary expenditure. Why? Because this expenditure of earlier period is directly violating the general principle, and hence to get the deduction of those expenditure you require a specific provision. You require what? A specific provision, students. I hope that all of you are clear with this one. In fact, I'll just take across the examples that you people have said it so as for larger benefit of the students. Current year expenditure, TDS default, disallow. Current year expenditure, TDS default, disallow. That much all of you are aware. But subsequent years, if I do a TDS compliance, then whether that expenditure which got disallowed earlier, the expenditure which got disallowed earlier, can that now be allowed to deduction and this year? But don't you think that in that subsequent year, that expenditure is of the earlier period? That expenditure becomes the prior period item. So therefore, to get the deduction of that item of expenditure, don't you think that we require a specific provision? Only then the deduction will be made available to you. This, if the section of TDS disallowance, section relating to the TDS disallowance, because of TDS default, there is a disallowance, they would have said only that much. Only that much. What they would have said? That because of because of what? Because of because of because of the TDS default, the expenditure is disallowed. If that is the only particular point that they would have written, then you would not have got any deduction of this amount disallowed in the subsequent year as and when the TDS compliance would have been made. You would not have got the deduction. Why? Because then the general principle that the current year items of income would only be adjusted against the current year item of expenditure, loss or allowance would prevail. So therefore, to give the deduction of that expenditure which was disallowed earlier, now they have brought specific provisions so as to allow its deduction. I'll give you example number two. You people already have shared. One section is very popular, students. That section is section 43B. Aware of that 43B? Certain items of expenditure will only be allowed to you in the previous year which payment is made. So, one of the example is say GST. One of the example students is say GST. Say for example GST is of 22-23. I have not made the payment of GST in 22-23. What would have happened? That year, that expenditure would have been disallowed. But I made the payment in the current year. I made the payment where? In the current year. In the current year, you tell me now, this particular context, will that particular amount of GST of 22, will it be allowed as deduction as per general principle? No, but as per the specific provision of 43B, yes. And all of you are aware, specific provision will override the general provision. Specific provision will override what? The general provision, because of the principle. Which principle? Generalia specialibus non derogant. Isn't it? Out of this? Generalia specialibus non derogant. Immediately type this to your boss and see his reaction. Enough of humiliation of articleship of 3 years. Generalia specialibus non derogant. What does it mean? It means that special provision will prevail over the general. For ST 22 made in 23-24 is allowed to you. That clear to all of you? Now I'll tell you students across India what the students are going to write and what you people are going to write in your answer. Different. Everyone will write deduction allowed on payment basis. You write like this, it's felt to lawmaker. Deduction allowed on payment basis allowed in the previous year in which the payment is made. In the previous year, and so what you have, what 99.99% students are going to skip, that itself is the soul of section 43, because they are defining the previous year for deduction of the following expenditure. They are defining the previous year for deduction of the following expenditure, and therefore this 43B is what? Is overriding the general principle of section 28(1), which speaks about profit and gains for the previous year, which as per the general principle it means only the current year item will be matched with the current year item of expenditure, loss or allowances. Hope that every one of you are now clear with this one. All of you students, that exactly is the point. So with that students, what you are going to do, first you will take a note in this particular context. Students, I will dictate. You all write. The charge charge is in respect of profit and gain. Profit and gains for the previous year. Profit and gain for the previous year. Full stop. Therefore, as per this general principle, as per this general principle PLE, for this general principle, only the current year item of revenue the current year item of revenue only the current year item of revenue will be allowed to be adjusted will be allowed to be adjusted against the current year item of current year item of expenditure loss or allowance. Expenditure loss or allowances. Full stop. Next line. However, however, there are there are some statutory exception, and the word statutory exception to the above general principle. We'll just give a list of those items. Okay. Point number 1, 35D, deduction in respect of preliminary expenditure. Deduction of preliminary expenditure. Point number 2, 40AI oblique IA. AI oblique expenditure. Expenditure is disallowed on account of expenditure disallowed on account of TDS default. Expenditure disallowed on account of yes. Full stop. Account of TDS default. Subsequently, subsequently, when the TDS compliance is made, then as per the above provision, such expenditure, for the above provision, such expenditure will be allowed. Expenditure will be allowed in the previous year in which the previous year in which the previous year in which the TDS compliance is made. The previous year in which the TDS compliance is full stop. Please underline the word in the previous year. Difference. Next particular section, 43B. What 3B? Certain expenditure. Certain expenditure to be allowed. Be allowed. Certain expenditure to be allowed in the previous year. Underline the word again. In the previous year, in which its actual payment is made. Which its actual payment is made. Full stop. Now, students, Ram also has said it. I'll let you know about one reduction, bad debts reduction. You need to understand, students, this particular concept very, very clear. You all need to understand this concept very, very clearly. In that situation, very careful now. Students, if I talk strictly as per the concept of previous year, strictly for the concept of previous year, forget what the provision is. If you may not be even aware about the provision also, that the sometimes ignorance is a bliss, but it is better to feed the knowledge. Yeah, normal this thing. Otherwise, it's like undoing and then redoing. So, students, as per the general principle, if I have to only speak about as per the general principle, then tell me what should the previous year in which bad debt should be allowed as the general principle. If I only think of a general principle, then in which previous year that the bad debt be allowed to be not saying about year, or may I put it like this? When the deduction of bad debts will arise, when the deduction of bad debts will arise, what is that occurrence? When the deduction of bad debts will arise to, that is to say, it is the when the amount becomes irrecoverable, when the amount becomes irrecoverable, that is the point of time when you can pay a claim of deduction of bad debt. Or may I put it in a different way? The year in which, as per general principle, the year in which the bad debts claim will arise will be the year in which the debtor has become bad. The debtor has become bad. Now, can you establish when the debtor has become bad? Can you establish? You are the SSC, no? You have got some debtors in your books. Now you tell me, can you establish the year in which the debtor has become bad? Say for example, in your books, Mr. Vijay Malia is also a debtor. Mr. Vijay Malia is also a debtor. Now, you want to write this as bad debts. Now, Mr. Vijay Malia, for the last 10 years, responding this case. And then what happens is this that you are, and your money he is not returning. Now, what you will say? Bad debts. Isn't it? So you will claim a deduction of bad debts. After a lot of try, phone calls, emails, you are now claiming a deduction of bad debts. So you claim a deduction of bad debts. Okay. Now what happens? By claiming the deduction of bad debts, you have reduced your profit, eventually your total income, and you have paid a less tax liability. Reduce your profit, eventually your total income, and the tax liability, and then you file the return. And at the time when the assessing officer will look into it, he says that why you have claimed the deduction of bad debt? Who is your debtor? You will say Mr. Vijay. He says that why you have claimed the deduction of bad debt? I did a lot of emails and calls I have done, and I have think now he is not going to pay my money. So the assessing officer says to you that you saw yesterday's news where Mr. Vijay Malia from London, he was saying in that news that he is all there to make the payment, not a defaulter. People should keep a hope in him. If I said this statement, the assessing officer says that this is not fair. You should in fact give Mr. Vijay Malia the last chance. Therefore, your claim of bad debt or you suggesting that Mr. Vijay Malia has become bad is incorrect. I will disallow. So what he does, he disallows it. He disallows it. Income is increased. You pay additional tax liability. Fair enough. You said it fair enough. I'll see now later on. Then after 3-4 years, still you are trying, not getting the money. And then finally decide after 5th year, after disallowance has happened, after that 5th year, now you are frustrated, you are now claiming deduction of bad debt. Now you said that now I'm convinced he has become bad. Claim a deduction. Now once you claim a deduction, now you go again to the assessing officer. He asks you, in this case, why you claim deduction of the bad debts of Mr. Vijay Malia now? Did you heard from Mr. Vijay Malia after that news? No. So from our particular judgment, income tax officer says from our judgment, he has not become bad debts today. He became bad debts 2 years earlier. You claimed 5 years earlier. We disallowed it. But we thought he's still good debt. Now you are claiming bad debts after 5 years. In this case, we think that you are late. Why you are late? As per us, the last 2 years, only he became bad debts. So now your claim is a belated claim. Therefore, we will not give you deduction of bad debts. So therefore, students, the deduction of bad debts became a joke. Deduction of bad debts became a joke because even whenever you claim, A will say that no, it is too early to claim a deduction of bad debts. This is not the previous year of loss. So therefore, he will disallow it. Later on, when you come again, he will say you are late now. So this means that bad debt deduction would never be allowed. That's the reason why they had to introduce a specific provision to regulate the deduction of bad debts. To a specific provision, they had to regulate the deduction of bad debts. And what is this deduction all about? Of 3617. As per 3617, students, I'll give you the notes. As per 3617, now you can claim the deduction of bad debts merely on its actual write-off in the books of accounts. Its actual write-off where in the books of accounts you can claim the deduction of bad debts. That's it. You write off the debtor in your books of accounts, you get deduction of bad debts. That is the previous year of deduction. Even if that may not be the previous year of loss. Why? Because it may so happen that tomorrow this bad debt is giving the money back to you. If he gives the money back to you, then what happens? This is a recovery of bad debts. and then that recovery of bad debts is considered as deemed income now in the year in which the recovery is made. To square up the deduction given earlier, to square up what? The deduction given earlier, thereafter, subsequent recovery is considered as your income. Why it is considered as an income? To square up the deduction. I hope that all of you are clear with this one. So, today position is the deduction of bad debts is allowed to you on merely write-off of bad debts in the books of accounts. As I told you, this need not necessarily be the year of law. This need not necessarily be a year of. You think that when this has become the exception to the general principle, what is the general principle? What is the general principle? General principle is that the deduction that you are going to get is only in respect of the loss, expenditure, or the allowance of the previous year. That is what section 3617 is on. Okay, please write briefly 3617, but that's 3617. Write brief. A deduction of the bad debts deduction of the bad debts under section 3617. 36 is allowed out on the basis of actual write-off, actual write-off of the books of account. Actual write-off of debtors, write-off of the debtors in the books of accounts as bad debt. Of account as full stop. Therefore, a deduction for statutory provision for the statutory Now, on the write-off of bad debt. Now, on write-off of the bad debt, the book of a bad debts in the books. Full stop. This need not, this need not be, this need not necessarily be year of, this need necessarily be the year of, full stop. If there is a subsequent recovery, if there is subsequent recovery, there is subsequent recovery of the bad debt earlier allowed as deduction, bad debt earlier allowed as deduction, then such recovery, such recovery shall be considered as deemed income. Recovery shall be considered as deemed income under section 41, subsection 4. Section 41, subsection 4. Fine, students, that is a list of it. In fact, I'm just giving you those things which is there in your domain knowledge. But as you will travel further, you will realize that there are many provisions which is allowing the specific deduction of an item of the earlier period. I told you already why we have to have a specific provision, because in absence of specific provision, the absence of this specific provision, forget the deduction that particular. Forget the deduction of that particular amount, students. That point clear to all of you? That is how the things. I hope that all of you are clear with this one. This is what, students, and I'm telling you, you would have realized now. That is the point. What you learn in BGBP is simply exception to the general principle. And the beauty is that 99.99999% of the students learn as if these are the normal provision. They don't know that actually what they are reading is nothing but an exception to some general principle. The point is you need to know to decode what? The general principle. If you can decode the general principle, all the provision, you can appreciate that this is an exception to the general. Now, step by step, I have already have unfolded the PGBP for all of you. What is going to be learned by you now? Every provision you will say, okay, why? Okay, this is the previous item, even deduction in here. Now you know, if this section would not have been there, you would not have got the deduction. Now you tell me, what is that you need to now know in the disallowance of 40I and IA? Are you supposed to now know anything? That's it. Now you need to know how much disallowance will take. Now, what is our purpose? Students, tell me now, what is our purpose to enter into this section? Our purpose is to know how much. That's it, quantification. That's the only thing why we are going to enter these set of provisions. That is the only thing why we are going to enter in this set of provisions. Is that point clear to all of you? This is what the things are, students. Hope that all of this is the biggest head of the entire total income. Or may I say this is the biggest chapter of your DT. Now see how irrelevant it has become by virtue of this cracking off this concepts now. You crack the concept, you crack the chapter. And that's the reason why, students, if you see, I have shared with you PDF file in your group. Book would be given. I told you earlier and I'm repeating it again. I told you, I think yesterday itself I spoke to you about this, that I have divided PGBP into two parts. Which are those two parts? Yesterday itself I spoke with all of you. One is all the small provisions and all these are these provisions. Why? We don't require now these provisions. What is the purpose of us to come under this provision? What is our purpose to enter into this provision? Only one purpose. What? To know what it is, quantification, how much. How much to done? That is only the purpose left for us to enter into this provision. Thereafter, I told you there is a part B of your PGBP. What is the part B of your PGBP? Sectorial provision, sector-wise provision. That is what only where we need on the examination day also, students. Now be careful. You will not revise all this. Why? It is already there in your mind. Already there in your mind. Directly now you will have to revise what in PGBP sectorial provision. I'll give you the entire examination thing also. Come to know how do I commit myself in what in this chapter. Every topic students also will be giving that particular part of examination. What and how we need to commit now going forward. Learning is one thing, revising is another thing. Need to know the art of revision. If final students, those who clear in first attempt, or those who are a rank holder, they know the art of revision. That's the only difference. So whether you take study leave of 2.5 months, family, you can still be a rank holder, or whether you take a leave of 6 months and 8 months, or 1 year, or do a dummy, still keep on banging your head on the wall with no good result. With no good results, students. Telling you, God. Now you tell me, you revised PGBP 100 times in a conventional way, as if everything is a normal provision. No, if you revise it in 100 times you'll have a headache. That is exactly what I was trying to draw upon this particular point to all of you. Be smart enough to now know how you the going has to be there going forward. This is exactly what it would be. Okay. So now, students, this I have given you this one part. As we will discuss this further, I will keep on telling you, reminding you. Look, this general enough for the introductory part. This have already have drilled down the core concept which we are highlighting upon. What is that? General principle. These belated claims not allowed unless what? There is a specific statutory provision to that effect. Brought forward loss. Tell me, brought forward loss of AY 21-22, will that be allowed to be as deduction in computing the total income? Even the total income under the charging section number 4, total income under charging section 4 is for the previous year. And if the total income under section 4 is charged for the previous year, now you tell whether the brought forward business loss, can that be allowed as deduction automatically? Can an automatic deduction, can that be given? There is no, unless there is a specific provision that effect. General principle, again the answer is no. All that is the game. Exactly what the game is on. Hope that every one of you are clear. Now, students, see, this is the beauty of. Yesterday, in fact, I gave you the glimpse of ICDS also, isn't it? You will not know, students, when you have completed the ICDS. That's the beauty of it. You will never come to know when you have completed the ICDS. That would be the point. In fact, in our depreciation section, which we will do, the biggest section of the head PG depreciation. In that depreciation section, which we are going to now very soon kick off with, you will come to know that almost all the ICDS is over. All the ICDS is over. Congratulations, students. Which means that the topic need not be addressed separately. Everything gets captured. The concept of depreciation. So students, in this regard, when I talk about this particular part now, be careful what I'm saying in this context. Be careful. This I was telling you students all about the items which are there in the P&L debit side. Related claims of deduction, allowance or loss. Let's talk about one more item. And that is the, up till now we were talking about the related item. Let's talk about future item. Can you get the deduction of any future item? The current year. The current year. Can you get the deduction of a future item? As per the general principle, no. See, the current year item be allowed to you as a deduction. There is absolutely no room. There is absolutely no room for deduction of the item. All of you agree to this one? Then, don't you think in this case, what about the provision for warranty? And such, I'm just giving an example. Provision for warranty. Provision for warranty. Warranty provision. And such other provisions that has been made. What is that? That provision is essentially for what? That provision, students, is essentially for what? That provision, students, is essentially for the expenditure or the likely expenditure that you are going to incur in future. For that, you are claiming the deduction in the current year itself. So going by the general principle, we will say if it is an item of future year, to claim in that year, na, when that particular warranty claim would be raised on you by the customer, claim in that year. Why you want to claim? Why you want to claim in the current year? That is what the assessing officer will say. But the department, but the assessee will say that, sir, I want to claim in the current year because I am maintaining the books as per the mercantile system of accounting. There are two system of accounting. What are those two systems of accounting? Family, in the commercial accounting principle, the books are made either on the basis of mercantile or on cash basis. So when he says that, sir, as per the commercial accounting principle, which is the mandate given to us under 145, I have prepared my net profit as per the commercial accounting principle, as per the mercantile system of accounting. Because I have prepared as per the mercantile system of accounting, I out the deduction of what? Deduction of provision for warranty. That is what the association wants, a deduction for provision for warranty. But the AO, see, there is a general principle of commercial accounting principle, and then there is what? Assessing officer, who is also pulling the general principle of previous year, and then that is the case where the disallowance will happen. And do you know why you make a provision? Do you know, students, why you make a provision? Provision is made for the future claims, future expenditure or future loss on the basis of prudence. Prudence is what you exercise. Prudence is what you exercise to put up the claim for provision, put up the deduction of the provision for these warranty or any other expenditure, loss or allowance that is going to be incurred in the future period. That is the reason why you create the provision. So prudence is what is followed. And yesterday I told you, students, ICDS 1. What was that statement yesterday which I told you? ICDS 1 says what? that in computing the PGBP, in computing the PGBP, we will not go as per the concept of prudence. We will not go as per the concept of prudence unless there is any specific standard to that effect. Unless there is a specific standard to that effect. So prudence, students, provision you create because you are preparing the books as per the Mercantile system of accounting, and then you want to claim a deduction. You want to claim a deduction, but then the assessing officer will say disallowed. Why disallowed? Not for the previous year. Second point. What is the second point? Concept of prudence should not be recognized. But now you will tell the assessing officer that concept of prudence is not recognized. I also know, but read the further line. And what is the further line? This is specifically covered under the other ICD. And yes, there is other ICDS, ICDS number 10, which says that the provision will be allowed to you. I'll give you in notes. Provision will be allowed to you as a deduction if two conditions. ICDS 10 says what? Will be allowed to you as a deduction if you satisfy two conditions. Condition one is that expenditure or the liability for which you have created the provision is reasonably certain. It is expenditure or liability for which you have created the provision is reasonably certain. And point number two, it is capable of being what? Capable of being ascertained. What do you mean by capable of being ascertained? Can estimate that particular amount. Satisfy these two conditions. To satisfy this condition, you will be allowed the of the you will be allowed the deduction of the provision, students. Is that what clear to all of you? Just write next paragraph all to quickly write the next paragraph. Similarly, as per the general principle of the previous year, similarly, as per general principle of the previous year, any expenditure, loss or liability loss or liability shall be allowed as deduction only if only if it pertains to the current previous year, pertains to the current previous year, and hence the hence the provision for hence the provision for the future provision for the future period, for the future expenditure or liability, for the future or the liability made in the current previous year, made in the current previous year, will not be allowed as deduction, not be allowed as deduction as per the above general principle, as per the above general principle. Full stop. Further, ICDS 1, right, like this, ICDS 1, ICDS 1 specifically prohibits, specifically prohibits the concept of prudence, specifically prohibits concept of prudence, the concept of prudence to be applied in computing, to be applied in computing profit and gains, profit and gains under the head PGBP, under the head PGBP and IFOS, under the head PGBP and IFOS, unless specifically as specifically provided, as provided under other ICDS, or under the Act, capital. Now from the next line, ICDS 10, name for provision, right, like this, deduction allowed if name for provision, deduction allowed if two conditions are satisfied. Deduction allowed if two conditions are satisfied. Which are those two conditions? First one. Liability is reasonably certain and it is. It is capable of being ascertained. Do you want to mesmerize the examiner? Tell me. If you want to mesmerize the examiner, I'll give you one sentence. Such liability is known as what? Known as liability in presenti, not liability futuro. Liability in presenti and not liability in futuro. These are all the Latin principles. And if it is, students, a liability in presenti, then if it is a liability in presenti and not a liability in futuro, then what, students? Will this be allowed as deduction? Will this be allowed as deduction? And the answer is yes. Students, presenti spelling, just I was just checking the spelling of presenti. Presenti spelling, please correct it. Liability in PRAE. That's the Latin for you. Presenti and not liability in future. Is that point clear to all of you? And therefore, will it be allowed as deduction? And the answer is yes. It will be allowed as deduction, students. I hope that all of you are clear with this one. Every one of you. And students, I'll just give you an example of this. Supposingly, let's take a car manufacturer. Students, a car manufacturer. If you talk about a car manufacturer, students, now obviously when he sells the car, while he sells the car, students, is there the warranty covered in that? Do we have a warranty, students? The answer is do have a warranty to that effect. Do all agree? Now, because we have got the warranty, students, obviously, even the car manufacturers know, say 3 years warranty. He knows wear and tear is going to happen the moment that particular car is going to hit the road, and then the person is going to come and put up the warranty claim for in that warranty period. That warranty period, that particular person is going to come and put up what? Put up the warranty claims to you. And therefore, students, in this particular context, therefore, in that particular context, students, please tell me, in that particular context, students, say for that 3 years warranty, he has made a provision for the car sold in the current year. In the current year, he has made a provision for warranty of 5 crores for all the cars which he has sold in the current year. For that 3 years period warranty he has given. Na? So 3 years warranty, he knows what will be the situation. He knows the customer will go to the service station, give the coupon, and then that coupon the service station is going to raise on us, and per coupon we have to pay him that much of per coupon we have to pay him that much of the amount. So what he does for all the cars sold in the current year, for that 3 years period, he is creating a provision for warranty. Say provision for warranty is 5 crores. Now 5 crores, is the liability certain? Not certain, reasonably certain. Use the word reasonably. Cannot be like, you cannot speak 100%. You have to speak reasonably. Is it reasonably certain? Yes. Only 100% students, as you know, only one thing is 100%. What is that? Death. Everything else in life is reasonable. Only one thing is certain is death. Rest everything is reasonable. Even your PA qualification, reasonably certain. Fed hard, worked very hard, reasonably certain that you will qualify. Reasonably. Nobody can say 100% in life. There is only one thing. One thing is that exactly is the game, and therefore reasonably certain. Is that point clear? Is it capable of being ascertained? Can you quantify it, students? Is it capable of being ascertained? Can you quantify it? Yes, you can. How you know you can quantify it? You already have the terms with the service station, no? With that service station, you already told him per coupon I will give you this much. So number of cars sold into number of coupons into claim per coupon. Already you know the figure. How much would be the liability outflow? And hence both the conditions are satisfied. Both the conditions are satisfied, isn't it? Now you tell me one thing. I claim a 5 crores. Both the conditions satisfied? Claim deduction. Deduction, will it be allowed? Yes, it will be. Liability in present I and not liability in future. Supposingly at the end of the third year, supposingly at the end of the third year, students, actual claim is only 4 crores. Possible? But how it is possible? How it is possible? Why not? Many car buyers have not come to the dealer to do the servicing, so they have not redeemed their coupon. That is it. And because they have not reached to the service station to redeem their coupon, gone. The actual claim was only 4 crore. And at the end of the 3 years, I come to know that 5 crore was the total provision, but the actual claim against that is how much? Is 4 crores. So how much of the liability has ceased to exist? How much of the liability has ceased to exist? How much of the liability has ceased to exist? Quickly! 1 crore. What I will do of this 1 crore? How much of the liability has ceased to exist is 1 crore. What I'm going to do of this 1 crore? Can you take your PDF prints in your WhatsApp? I've already given to all of you that PDF file. I'll just share again. You already have it. Page number 8. Page number 8, students. Already you have it. I'm just to put. I have not uploaded PDF just because I didn't know that I'm going to speak it. But can you see that particular page number 8 of the PDF that I have already shared with all? And I want you to just before B. I don't want that or part. Huh? Don't read out the or part. Stick to whatever or the screenshot which I have given to you. You can just stick with that. I don't want you to read the or part. Just that point number 1. I've also shared the screenshot in your group. If you want to read that much. Share the screen. And so first deduction has been given in respect of loss, expenditure or trading liability. So I got the deduction, and subsequently during any previous year, what would have happened? Either I would have got back the amount, refund of that amount, or some benefit in respect of what? Such loss or expenditure in respect of such trading liability by way of what? Remission or cessation thereof. Can I say therefore the liability of 1 crore, please pay attention now, that liability of 1 crore has ceased to exist. I claim the provision for 5 crores. I took the deduction of 4 crores. Sorry, I took the deduction of 5 crores. The actual claim after the end of the 3 years is how much? 4 crores. How much of the liability has ceased to exist? 1 crore. So can I therefore say 1 crore of the liability has ceased to exist, and therefore what? Rupees 1 crore will be considered as what? Deemed income. Under which section? 41(1). 41(1). Or do you all agree to this? There is a deemed income. Yes, there is a deemed income. But under which section is also equally important, isn't it? Under which section it is equally important? Under section 41(1). I hope that all of you are clear with this one. So you have got the deduction of liability, point number A, and subsequently what? Either you have received the amount or there is a remission or cessation of the trading liability. There is a remission or cessation of what? Of a trading liability. So if there is remission or cessation of the liability, liability has ceased to exist, then that much of the liability which has ceased to exist, for which you have taken the deduction earlier, that will become a deemed income. Under which section? 41(1). In which previous year? The previous year in which such liability has. Is that point clear to all of you? See how the linking is happening? General provision, then ICDS, then 41(1). See the check and balance that is there. Known as what? Check and balance. There is a general principle, and then you have to refer the specific provision, and thereafter in ICDS that we referred, thereafter we closed it. The entire loop we closed through 41(1). That's how the loop has got closed. I hope that all of you are clear with this one. Every one of you, isn't it? That is what it is. Just write last sentence friends then in this case. Just write one last sentence below this only. If the actual liability, actual claim on the liability, actual claim on the liability is lower than the provision created earlier, lower than the provision created earlier, then the excess, then the excess provision or the liability which has ceased to exist, liability which has ceased to exist shall be considered as deemed income under section 41 subsection 1. The section 41 subsection. In the previous year, underline the word in the previous year, which such liability, which such liability has ceased. Such liability has ceased to exist. Okay, students, full stop. That unfolds your entire, I told you, it unfolds your entire. Rest is now only conversation, students. You will find now how quickly, how swiftly now we run on this chapter. Except for depreciation. Again, depreciation I'll go slow, students. Why depreciation I have to go slow? Because it will link you to the ICDS and everything. The format in which I'm preparing to all of you, that's also the only format that you are going to revise. Be very clear. I know now after this lecture how much of your attention should be given to which section. So the quantification of your time for attention on which section should be given. Now I have got a clear mandate. You may not be aware. So unnecessarily you are now not supposed to drag yourself in reading those sections. So that is how I'm going to now put you across to a classic test where how much time is going to be required, what sort of a practical application that I expected from you, that is what it is. Now students, I'll tell you what I'm going to do with all of you. We need to be now examination oriented in our thought process also while being knowledge oriented. Some sections, petty sections, I will be telling you read and come. Then in your group, I am going to give you a case study. You will try to solve that case study, which are essentially based on the ICI past year examination. And then after you have attempted, then the next class we will discuss the solution. And through the solution, I will explain the provision. Why? Because those provisions are already dealt with. So now we will have practical approach of the provision, which is how to commit its answer in your question when you read the provision. Enough of knowledge. Now it is executed. That point clear to all of you. See you then, students. Next session. Fine.